We are, let's see. Yes, we are live. GP,
Okay.
how you doing? Happy Tuesday.
Happy Tuesday.
So it should be live everywhere. At the very least, I know it's live on YouTube. If you want to check the X.
It's live on X. I checked
X,
it's
cool.
on X as well. It's live on, yeah, I think it's live everywhere.
Oh, whoops. Let me just tweet it out on StockTwits real quick.
Yeah.
You know, it's always interesting. Bag's taking care of all this. It's like so much stuff, like buttons here, buttons there. All right.
Yeah, he's
hey,
really
Randy.
good about it.
Yeah, I mean, I kind of let's do a quick rundown of the indices quick. Holiday week. I got the Qs up, and this is kind of how I was looking at it, at least in a zoomed in sense on the daily. So I thought that, we could be building out a head and shoulders, which if that confirmed, it would take price kind of down here. But at the same time, we also have kind of an inverse head and shoulders building out. And ultimately we break out of that. And I think that kind of takes us up here towards like the 680. Zooming out to the weekly, whoops. We're in week 15 of this fucking chop range that has been, pretty wild. I mean, just kind of looking at the up down action, it's been pretty violent. Going out to the, again, going out to the weekly, week 15, kind of end of the year, which kind of has me really thinking we, start off 2026 with a fucking bang. If we get a breakout here heading into the new year, I mean, I think that would be pretty freaking sweet. The SPY looks a little bit better. We didn't quite go 3-week tight on the Qs, but we did on the SPY. We actually put in a 4th tight week. And interestingly, I was thinking I actually did put on the TQs and the Soxel today, thinking that the mag names are starting to kind of perk up and look pretty good. I don't know what say you? How are you looking at it?
We've been pretty much the gap up in the Qs has been resistance for a really long time now, a couple months. That's the U.S.-China trade deal gap up. If you're looking at the futures, it's the 25,700 level. It has, as you can see, it kind of created an island bottom and then got destroyed. Tried to get back to it after getting undestroyed, and then gave you a 50% retrace. 50% retrace held, and now we're pushing back up. So in my view, technically, this is a bullish view. We are year end, so it's a light volume trading kind of nonsense stuff. But there's so much that looks good going into next year that it's almost like taking a cautionary tale, right? But we've been led by metals, best performing asset class in 2025. Gold, silver, palladium, copper has yet to break out, but that's next. And so you're going to see strength in these names going into year end. This is typically how it goes, right? Money flows into the best performing asset classes to the end of the year, and usually in the first week of the year. And then you got to see how this price action plays out in metals. I think it's going higher because the number one metal that the economy needs is copper, and copper hasn't even given you that move out, right? FCX is Freeport McMoran, but CPER is the ETF for copper,
Oh,
right? It's sitting there, but if you're looking at futures, it's HG. G is in GP,
oh,
right?
yeah.
So like this looks, if Dr. Copper does what it used to do, which is lead the economy, it's a real world kind of look in 2026, right? It's your mag names are always going to be real world, whether they underperform or outperform other sectors, who knows? It's mag. They are cash cows. They are looking better overall. So yeah, I think a lot of people think 2026 is going to be terrible for the markets, and I don't know if they're actually looking at charts or it's their macro views. I am not in that camp until we see price action represent that. Like, I'm not.
Yeah.
If you thought the markets looked terrible in 2022, you were getting slammed in 2023, and then getting bent over in 2024, and then getting curb stomped in 2025, right? So you can have what you want on what 2026 looks like, but until the price action starts representing it, and you'll know. I think you'll know in the first couple of weeks, right? Whether it's going to be a turbulent year or a terrible year. I mean, a great year. So
I would
yeah,
probably,
I'm not.
you know,
I'm a bit neutral. I'm bullish with I'm bullish, and I'm kind of neutral, because if you look at charts, PayPal looks terrible, XYZ looks terrible, Paycom looks terrible. There's a lot of charts that still look terrible. So I think it's still going to be a stock picker's market.
yeah, I think that going into 2026, I always kind of, I mean, actually, going into the new year, generally speaking, I try to anticipate some bit of volatility going into January, just repositioning. Um, I don't know. I read a book a long time ago that talked largely about the January effect and just kind of like
Yeah,
how that plays out. But I don't know. It just the way the market is setting up, both the indices, mag, and then even like the more speculative names, kind of the momentum and high flyers, like they've all been obliterated so bad. It feels to me like that they're trying to bottom out. And I would think if we get the breakout here, it's going to be kind of, I don't know, literally throwing shit at the wall again. Kind of whether it's an ultimate shitco season or not. I I don't want to say, but I don't know. I'm definitely optimistic, and I kind of am with you. Just as a technical trader, it'd be hard for me to say like I think the year is going to be this way or that way until the price action literally dictates that or tells me that like, hey, it's time to, you know, either take money off, whether the market's forcing me out via trail stops or I start to get chopped up, and then it's like, okay, well, I gotta pull back. So
yeah, and
I don't know.
calendar flips are insanely powerful, right? Like they can dictate a lot of what, like, and that calendar flip usually happens first or second week of January. I think the first couple days of January, which is why you get the Santa rally that people talk about, is institutional flow that's remaining from 2025 coming in and starting the new year, right? Pension funds, etc.
Yep.
All that stuff comes in to start it off. And then if you see that end of that week of 1st January, we reverse lower like we did in was it January 4th, 2022, right? If you go to the Qs, not weekly, but the daily.
'2022. Good
Yeah.
lord.
Yeah, but it's similar looking to this, right? So that's why I give this conversation,
Yeah.
and overall, some of my thoughts have been we could be representing 2021 again, especially with what you've seen in some of the high flyers of this year.
Yeah.
Rocket Labs, I think, was one that we talked about, right?
Yep.
Crushed all-time highs. Again, that double top kind of breakout. Let's see if it's more, if it's less. But if it starts failing, which it already did, starting like it already got lower uh, after it broke all-time highs yesterday, that's usually not a great sign. But hey, man, it's SpaceX IPOs next year. It's possible that this thing keeps running.
That's
Um,
that's kind of
but
what I was thinking.
yeah.
Do you think that once IPO season really gets running hot, we'll start to see the market cool off? Like, do you think this, like SpaceX being what all came? Remember, it was like in 2021, 2022, it was like Roblox. Um, I feel like Roblox was really the one that kind of like top ticked the market, wasn't it? But anyways, I guess kind of my question was like, do you think that like SpaceX could be kind of that for the market?
Um, yeah, there's going to be a frenzy of buying, but it's coming in at 1.5 trillion. I don't really have any interest in buying a company that's coming in that's priced in years and years of growth before it's it's Elon's company. I'm sure he'll do well over time, but similar to Facebook in 2011, 2012, came
Yeah,
in like the hottest thing since sliced bread.
yeah,
At some ridiculous, I think at that time was $100 billion valuation, right, or something like that. And you're like, wait, you guys barely make any money. Like, what are we talking about here? And then it got after the initial pump, it got destroyed for 50 something percent, right? So um, that's what I think happens to SpaceX, and when that happens, that's when I will look to potentially get long. I am not buying off the open of any of that stuff, right? That
God,
there's the
it's set
yeah,
up super well too, though. Like if SpaceX set up like this, oh my god.
yeah. So, but
Yeah,
that's the problem. Like at 1.5 trillion, you need this to go for a 10x. You need it to go 15 trillion. The best company on the planet right now that generates cash more than any other company on the planet is NVIDIA, and it's not. It's struggling with 5 trillion, right? So, the assumption is the TAM of the overall market grows crazy.
yeah,
Sure, but if SpaceX is sitting at 15 trillion, then I can tell you Nvidia is not going to be sitting at 15 trillion either, right? Like
sure.
it's going to be at 20 trillion and all that other stuff, valuations and stuff. Um, I can't fathom the numbers. I couldn't fathom the 1 trillion number when we were at like 300 billion. So I'm not saying it's a good indication of anything, but
Yeah,
yeah, I don't have any interest to buy unless Elon comes out and says, as a shareholder for more than let's say 5 years, you get access to SpaceX at the discounted 50% discount value or whatever. Then I'd be interested because then I can dump it as soon as it IPOs.
sure.
But other than that, I don't like to answer your question. I don't know, Nick. Like
Yeah,
yeah,
I think
I
it'd be
think
worth.
we top not when SpaceX IPOs, but when Griffman IPOs.
Sure. Well, I was just thinking that for those listening, I think that maybe going back and taking a look at some of these, like how price behaved. You know,
Yeah,
you've talked at length about not really liking getting involved within like an IPO or an IPO base. And I think Meta is kind of a good example of that. Like if you're just, looking at how this played out, I mean, there's entries all over the place, however you kind of want to set it up. But I think I don't know. I think it's kind of worthwhile looking back and kind of studying the technicals on some of these IPOs.
Oh, 100%. And the thing is, if you bought it at 11 or 12 bucks, great. You got a steal and you should never sell that piece, right?
Yeah.
But even if you weren't this guy who was bottom fishing, if you just took the retest of the IPO highs on a great company, right? We all
Yeah.
knew even at that time Meta was going to be a great company and Zuck was going to be able to figure it out, but it was coming in too hot for those market valuations at that time, right? So when you got that opportunity on the retest of the breakout, you're up 15, 20x, even if you didn't buy it at 11 to 15, right?
God, I was such a hater of Facebook back then. I mean, still am
Everyone was.
to a degree, but I'm pretty sure this is about when. Actually, I want to pull it up. I think that's pretty much when the market broke out, right there in 2013, isn't it?
No, market broke out it reclaimed in 2013, the double top, right?
Yeah.
And so that's when the bull market started.
Yep.
But after it reclaimed, it sat sideways, and the irony in all of this that cracks me up the whole time, the bull market started the day Trump was elected. So if you look at the price action, it's hilarious. If you look at the price action, go to like the weekly, right? On the SPY is a better indication of this, right? And you go and you're comparing the 2000 and 2008 tops. It's my pinned post, by the way, on Twitter. So if you ever want to go check out this chart for future references, you can. But we had a top in 2000 and a top in 2008. Everyone calls 2009 the start of the bull market. Those guys are idiots.
Yeah,
I don't care who you are. There was no bull market in 2009. There's no bull market in 2010. In 2011, we were talking about going back into recession and a heavy recession after the initial blast off, right, from 2009. It wasn't until 2013. Is it on your chart there? Yeah.
Well, I mean, this is kind of the same conversation as 2022. It's like you could say that the descending channel in 2022 was you could call it a breakout or whatever you want to call it, but the trend doesn't technically resume until that pivot high gets taken out. I think that's kind of what you're saying here in terms of SPY as well.
Until everyone that's been underwater for a decade doesn't get made whole, you are not in a bull market. That's the reality, right? Because the guy who sold in 2000, right at the tippity top of 2000, has been chilling like a villain. But the guy who did not sell in 2000 has not been chilling like a villain. And until those people get made whole across the board, it's not a bull market. You can argue whatever it is. The new trend starts when price pivots out of bases, right? We talk about this a lot, and that's just general thesis, which is why the people who sold at that level regret it for a lifetime. It's like, oh, well, I should have been able to see the bigger picture. Well, dude, these are the bigger picture conversations, right? Like in 2009, when I first started trading, 2008, 2009, I didn't know any of this stuff. So I was like, yeah, that's double top, blah, blah, blah. Like triple top, like, no. We are consolidating, we are breaking out. Obviously, hindsight is a great tool, but you can use this hindsight to tell you where things are going next, right? And so if you're looking at names that fit this bill, Nick, look at ExxonMobil, right? Like, as much as we hate oil on this podcast, this has been consolidating for 3 years at the 2008 highs. 3 years.
Why is my
right?
all messed up? There we go. A never-ending range.
But the people from 2008 are still not whole.
Yeah.
They are
Yeah.
now because we're breaking through it. But what I'm saying is we've now sat 3 years consolidating in this very, very tight range of ExxonMobil. If you are looking to short this, I can see why. I understand why. But the consolidation is telling you that this is going higher. Does ExxonMobil move like Rocket Labs? No. So if you're looking for a 500% stock that moves, this is not for you. But this steady eddy 50, 60, 70, 80% over the next year or two, while you get a dividend to boot is a good way to smooth line your equity curve, right? And it's these are the breakouts that you look for, right? And copper is in the same boat. So, and if you need any indication of how these breakouts occur, just look at gold and silver. Silver broke out of a 47-year base. 47 years. RSI sitting at 80, 85 on the monthly, on the quarterly, on the daily, on the weekly, on the hourly, literally everything. And it has gone up $20, no, $15 since it broke out. Your indicators, all that stuff is irrelevant, in my opinion, when you're breaking out of this big base. Can it fail? Sure. But it did break out. And as soon as a breakout happened, your trend was lit.
Whoops. Our silver
gold.
Age,
we talked about gold how many times on this podcast, Nick? Once 2100 clears, just sit back and relax. But until then, it's going to be chop, chop, chop.
I mean, this gold looks a lot like XLE. It kind of looks like we're like right here. Or I mean, it looks like we're kind of like right here is where it kind of looks like we're sitting.
And do you know how many people are talking about the metals and commodities super cycle that's beginning, right? Like,
yeah.
And ironically, crypto's weak.
We talked about it way back when. I mean, probably a year or so ago now. In thinking about crypto, right? Like if we're talking about going into the metaverse, the metaverse is essentially like this like real life arcade. Most of these most of the shit coins really should just completely implode. You'll have the ones that kind of hang around, but I guess just the way that I see it playing out is, if you're wanting to go into like the Apple metaverse, you're going to be using like Apple coins. If you're going to go into the Googleverse or the metaverse or Teslaverse, whatever, I guess whatever ecosystem you're jumping into, you're going to end up you're going to have to use whatever coins that they're using as currency. And so I had this thought that like crypto, I don't know if this, okay, sorry, let me back up. If this is kind of going down a conspiracy theory route. If the system is designed to like break us down, right? And to break people down to create reliance on the system, what better way to do that than completely obliterate crypto, or crypto goes into this massive bear market. In the meantime, basically like the equity markets and speculative growth go to the fucking moon. Because ultimately, most human beings at this point are owned by tech, right? Like they're addicted to their devices, addicted to these different apps and whatnot. And like, rather than being involved in investing in these, they're focused on shit coins and like revolutionizing currency, which I don't know. I don't know where I'm kind of going with that, but if you want to shift over to crypto, it doesn't look good at all to me.
But it doesn't look bad.
It doesn't look bad to me, only being that we're within this channel. But from like, I guess more of an active trading, from a more active standpoint, I'm like prices below the 200-day, prices below the 150-day, prices below the 50-day. Kind of to the same point or talking point as we talked about gold, like just taking out a new high and then just sit back and let ride the trend. It's kind of like the same, or at least where my mind is going. It's like the same thing with crypto. It's like set your alerts at 100,000, or even if you wanted to use the 10-week, set your alerts at 95,000 and pretty much ignore it until then, or set your alerts at the very least at kind of these extremes, whether it's a channel test or reclaiming kind of a major moving average. But I would agree. I don't think it looks horrible, but I don't think it looks good either. Like, I would rather be moving my money into like fucking spaceships and shit at this point than being involved in any of the shit coins. I don't know. I think I just don't like where price is sitting. At the same time, 1, 2, 3, 4, 5, 6, that's 6 weeks tight. So like I'd be tough to say that I think this is a bear flag only because of those tight closes. If we didn't have these tight closes, I'd probably be leaning in the bear flag camp.
Yeah, I'm not in that camp, right? I think the crypto has, after that 10-10 candle, I think it wiped out a lot of money.
Yeah, for sure.
Right? Where people who had millions got destroyed. The people who helped make the market are absolutely obliterated, right? So they're licking their wounds and stuff like that. So crypto just seems apathetic to me, right?
Yeah.
It doesn't seem like it's going to break down. It just seems like it's going sideways. We may wick lower. I'm not saying that we can't, because it's crypto and it does wild shit. What I'm saying is I don't think you might, and if you have a stink bit in there, you might get filled, whatever. I just don't think there's anyone who's focused on this when you have metals going bananas, right? Like, you have trends that are well established and moving, and it's a general market consensus. Like you talked about earlier in the show, 16 weeks sideways. I think traders in general have gotten absolutely obliterated over the last 6 months because they're playing options and they're not doing equities, and options have been a nightmare unless you catch the 1, 5, 6 minute move where it goes higher, or you're involved in, like for me, where I got AMD when they announced the open AI investment. That was monstrous. But ever since then, it's been garbage, right? Like, if you were like, hey, this is huge, this is the breakout, it has done the opposite. I was selling into that because that's this market. This market is a two-pump chump, right? Like, for a lot of, since do you remember the breakaway gap we talked about on May 12th? Since that May 12th breakaway gap, there's been a lot of stuff that has grinded higher, but if you were playing options, you weren't getting rewarded unless you were very, very short time frame, right? Like, sure. And Tesla right now is your greatest example of this. Tesla, when it takes out all-time highs, goes ape, right? And instead, it's playing coy, and it's playing shy, and it's telling you that we're not ready. And all these people who are selling calls are getting rewarded. It's like, well, I'm going to call for a 3% move. Nick, I get annoyed by this a lot. It's like, oh, I called Tesla to 525 or 515. I'm like,
that's not a bold
ATR. Call. Like, you are not calling shit. You are calling a move that happens intraday. We had a 17, 22, and 17 point move just last Friday. Yesterday we had a you are not some wizard when you call for Tesla 505. You are just playing ATR. Anyway, so my rant is over, but my whole point is that even names like Tesla, which just last year, 2024, went from 214 to 488 without flinching in 2 months, right? And now has spent grinding for months. Every time you buy a call, you regret it. It's impossible.
I was thinking Tesla. I was thinking about you quite a bit as Tesla's been chopping around here. I was thinking that they were going to gap 500 or they're going to gap 500 and it's going to run and it's going to take off and leave a lot of people behind, I think.
Yep, but when is the question, right? It's
Yeah, for
the
sure.
My assumption is the calendar flip, right? That's
Yeah.
when it happens, right? This 2025 it has been about collecting all your premiums constantly, and 2026 will be the breakout. But Nick, we've had how many amazing pieces of news in Tesla to gap and go,
Yeah.
and like
They're
you
not
had
running it.
the CEO buying $1 billion in shares. Nope, gap and crap. The Delaware ruling, gap and crap. We finally have a handful of robo taxis without drivers, gap and crap. Like everything has been gap and crap or gap and sideways. So my point is not to belabor Tesla, but my point is to belabor the the traders who have gotten absolutely obliterated with very tight ranges. And if you weren't like, if you were an options flow seller, news seller, or information seller, you've done really well this year because it's been critical pieces of news because it's dictated a lot of the move. But outside of that, like lots of things, even though Tesla is 40 points higher than when we talked about the breakout, it has not been a great
Yeah.
trader. Sorry. And same thing with Amazon. Amazon keeps failing the breakout. Yeah, there's been a lot of names that have been sideways. So I think a lot of people in crypto and short-term options traders have been destroyed this year. It's really quiet on FinTwit. Have you realized that?
Yeah, I've noticed on both StockTwits and Twitter. It's either the like the very, very short term, like day and maybe 1 to 3 day swings at most, or the like longer term, almost either position or trend trading. Like it's not very much in between. I don't like I guess when I think swing, I generally think like a swing trade is a few weeks to a few months at most.
Yeah.
Where like longer term into like position trading, I would say is like 3 to 6 months plus. And I was wondering, I don't know, I kind of you hear about like the K-shaped economy, and I was wondering or been thinking to myself, I think that's very indicative of the way that the markets are behaving as well. And I think if the markets do genuinely go or legitimately we move into this 24/7, 24/6 kind of market, I think that's going to continue where the middle is going to be continually be very difficult where the day trading, scalping, um again kind of 1 to 3 day moves I think will be in play, but then also like the zoomed out picture, like the weekly and the monthly, like longer term trends. um I don't know. I don't know why I think that. I would just anticipate like the market almost moving in a similar fashion as crypto once we do kind of go 24/7, at the very least in the short term, until kind of things get kind of worked out. But God, like I can't imagine, being full port something and news hits across the globe sending futures down and like getting obliterated overnight.
I
I don't
don't
know.
I don't want to even talk about 24/7. It scares the living daylights out of me because if you have a player who comes in, forget news, right? Like
Yeah.
this has has an amount of money that's more than anyone else. You can easily push down
Oh God, I know.
stocks continuously, especially liquid names. Let's take Tesla for example, right? Like
Yeah.
I can see Tesla having a minus 30 point day every overnight and then waking up to being green, but um, it's it's not something I'm looking forward to, and I think that it will probably coincide with me just slowing down and stepping away from the markets, because it'll be paramount to being more long-term focused at that point.
For sure. Managing risk in that kind of environment,
manage risk, you just go YOLO.
Yeah, that's all I don't know. It scares me.
Can you imagine, Nick? Like you buy a stock, right? Let's say you buy Google, right? And Google's sitting at 313 right now. Market closes 8 p.m. hits, and by 11 p.m. there's a trader who really just wants to be short and push the price down, and he has enough money behind him, and he pulls Google all the way to 296.
Yeah.
If you're sitting there at 11 o'clock at night and Google's sitting down 16, 17 points overnight,
you're going to have margin call dingers going off left and right.
Yes.
You might as well just let margin calls be your alarm clock.
Yeah. Or you're going to panic sell, right? And you're going to be like, well, I'll just wait for tomorrow, right? And so the manipulation and conspiracy theories will probably be at all-time highs by then. 100%. I don't like the concept, but there's only one way you can distribute out, and you're starting to see them stack out, right?
Yeah.
So but let's talk about what next year looks like. Yeah. I'm curious on what you like. Obviously, you want to wait for price action, but where do you see strength in 2026?
I see that. I mean, I think that's why I asked about SpaceX, because I think that both the aerial and space theme, I think, will continue to run hot into that. Is kind of where I'm thinking. But I also think drugs continue to look good. I'm trying to remember his name. Tom O'Brien mentioned, was it Tom O'Brien? One of the guys I follow on Twitter was talking about 2026 actually being incredibly hot due to, I don't know, changing the tax code that goes into effect January 1st. I think with interest rates down and the IWM running, I really think that we could have like another kind of shit call momentum run, because ultimately I think IWM is heading towards like the 300, and I think as long as we're kind of within this trend, there's going to be opportunity all over the place. But just being how hot, like, again, kind of drones, aerial, space, all that shit, I think that kind of continues to run into the SpaceX IPO. I don't know. Yeah, I don't know. I'm incredibly optimistic and obviously bullish, but it's only being where price is sitting currently, not due to like what I necessarily think is going to happen, I guess, in this coming year. So I think that those will continue to be the top of my focus list, even on like the shorter term momentum trades, everything from drones to rockets. So like, again, your ACH or ACHR, your Jobies, your ONDS, all of like lunar. I think even some of the more like robotic stuff looks pretty good. So like, Serve was one. I like when we were talking about our 2026 pick, it was easy to look at RIVN because RIVN has already essentially gone stage 2. And the only reason I'm leaning towards Moderna is just because I think drugs continue to rip. And my qualm with Moderna, though, is that it hasn't broken out of this yet. So I'm like, if I go with a name that hasn't quite broken out of this range, I run the risk of getting trapped in a stage 1 base where obviously I'm trying to beat the two of you, right? Like we're trying to beat each other. So it's like, I don't know.
We haven't made the pick yet, right? That's next week.
No, yeah, next week. Yep. So were you going with Rivian, or were you still kind of up in the air?
No, I got I think I'd said open anyway, right?
Oh, okay, yeah. Anyways,
No, I still haven't decided. Unity is another one. Ultimately, Unity is out of its stage one base. Stage one bases to the upside are kind of like how Roblox behaved this year until it fell down.
Totally.
Kind of how Palantir had behaved this year or last year, actually. All these names that management has to execute, right? Stage one bases are there for you to manage risk, but without execution from the company, your stage one bases don't matter. I think a lot of people put too much credence into stage one bases if the management doesn't execute, right? Like,
Sure.
like Rivian has to execute. It looks great. It executes, it goes nuts. Absolutely, right? But if it, like, the thing about Palantir, why people are like, oh, this is the next Palantir. Well, Karp was executing. He was crushing numbers quarter after quarter after quarter after quarter. He's still crushing numbers quarter after quarter, right?
Yeah.
What now Palantir runs into is comps, right? This year's comps, last year comps, where it may struggle and may need to consolidate. But while it was breaking out, management was executing at over 100% execution hit rate. If Rivian doesn't do that, if Rivian comes out tomorrow and says, hey, instead of the April or March launch date, we're going to push it back to 2027, guess what?
It goes right back into the range.
Yeah. So stage one bases without management execution is where people struggle, right? So you have to have moments of fundamental tagged along with your base breakouts, right? It's not base breakouts without data is fluff. You're seeing it in Tesla right now. None of this is material impact. It's just all news, right? And so it can't break out of this monster base because there's no material impact. The only material impact that's going to come in Tesla is when they release delivery numbers at the beginning of January. That's what breaks it out. If they crush numbers again, if they deliver a crap ton of cars, that's what's going to break it out. That's real world material impact. That's Elon executing at a high level, right?
Yeah.
So, but that's all stocks, right? Like NVIDIA was already kind of breaking out, but the big breakout came when in 2023 they said next quarter we're just going to casually guide up from 6 billion to 11 billion, and then they came in and they crushed that number by coming in at 13 billion.
It's such an insane chart.
Yeah. So like if you're looking at 2026 and you're trying to figure out like what you did wrong in 2025 or what you did right and all that other stuff, please take charts into consideration, but don't forget the other factors. Companies have to execute, right? Like if you don't execute, you don't get the breakout, you don't get the movement. Then you have all the quantum names that have zero revenues that are all straight up mental. So I'm not saying things can't move higher, but if you're looking at rock solid companies with stage bases, the company has to come to the party as well.
I think that's kind of the beauty though, or like the draw to like the O'Neill Wan style like growth investing, is because it's like it's a techno fundamental like approach, you know, like both has to be there for you to be involved. It's difficult to like have conviction in a growth name if price just continues to go sideways or trade like shit, and then vice versa, like exactly like you're saying, where you can have the prettiest stage one base all you want, but what's going to really and ultimately lead to price trending, it's going to be execution and like a catalyst, right? Like yeah, I'm totally with you. Rivian I think is a good example of that, where I don't know, The stage one base is super pretty. Like you see the accumulation and you see the, the tight close at the bottom of the base. Higher lows continually getting put in, but all things considered, again, to your point, if I don't know, they don't execute, they're just gonna fucking roll right back over and head back into the base. Did I click something or did you click something?
No. I mute because I'm typing stuff. I mute
sure.
the mic when I'm typing. So it's not clacking in people's ears. What I will say is that if you want any frustration of stage one bases, Wayfair is a great example. Wayfair sat there and did all of this stuff, but they started executing, and their numbers are starting to improve on a great base, and it's now starting to break out.
Yeah.
But if they didn't execute, Wayfair stays in this base for another 5 years or 3 years or 1 year, but it had to line up with fundamentals actually evolving to the upside. And if that changes, Nick, right? Like if their fundamentals come out bad, they'll give them 1 quarter pass, right? They'll dump it on 1 quarter, but they won't dump it too hard. But if they do a second quarter of missing fundamentals, that's done. It's game over, right? So, but they still have to continue to execute. Carvana is a great example. They just executed. You talk about how nuts it was, and you can talk about how much of a fraud it is, all that stuff. Management got the note. When monetary policy shifted in 2022, the utmost goal was to be a profitable company, so you don't have to go to the market to get funding because it was really hard to get. And that was one of the first things they did, and one of the first companies to do it in that monetary shift. And they got rewarded like crazy.
Is it weird to you, like totally off topic? Like, I don't know. Anytime I've bought in a car or a truck, like I kind of want to go sit in it, drive it. I don't know. It's weird to me that you can just pop online and order a car. They deliver it right to you. I think it's bizarre to me. But I guess like
we own Tesla, the car itself, and even I was looking at potentially getting an upgrade towards the end of the quarter or whatever, because mine's about 3 years old, and even that I was like, no, I gotta go test drive it, right? Like I'm not it's the same damn car, but nope, gotta go test drive it. So I'm in that camp. Yeah, I think it's weird, but if you have already test driven it and you already know what you want, but you can't find it anywhere, Carvana is a great solution, right? Like let's say you like if you like a 1999 Porsche 911, right? You may not be able to find a great one on the Northeast, but one in California with no rust or whatever, and you want it and you want to hold on to it, and it's a collector's car. Carvana is a great tool. It globalizes or nationalizes the buying process, which before you had to go on Craigslist or Facebook Marketplace or eBay or whatever. This is all kind of one solution.
I mean, shit, if you get to bypass like a car salesman, I mean, it's not. I think I just come from, or at least as a millennial, I think there's still remnants of like my parents' generation where it was like just super nitpicky about little shit, like little ding or nick or some rust here or there or something like that. And it was like, I don't know, catastrophic. Like, oh, I can't buy that car because it's got a little door ding on it. I don't know if that's just me or other people, but
yeah,
I don't know. Yeah, shit. What's going on in the chat? I haven't really even putzed.
Yeah. So I promised that I would talk about a coin trade. So while you're checking out, this coin chart reminds me, and Bags, if you're listening, it reminds me a lot of what we talked about in coin back when it was in like the 50s, right? And I think you took shares in the 50s, and I took a leap option, right? And I think we both got rewarded in different ways, but I really like the way the coin chart is looking on the monthly and the quarterly, right? there's two ways to look at it. You can look at it as the cup and handle, right? From the IPO highs, right?
Yeah.
This is very similar to that. Or you can look at it as this big inverse head and shoulder. There's a lot of accumulation in this chart, very little selling. So I think 2026 is going to be a good reward for coin, and they just got the catalyst, which I think will get priced in over the next year, which is they are no longer just crypto. They are
Yeah, I
equity
saw
based.
that.
And so I don't know who the loser is going to be. I honestly want to pair trade, selling down, shorting hood and going long coin, but I don't want to be cute, so I'm just going to go long coin.
Yeah.
The trade I took on was I'm not going too far out of the money because it's expensive ultimately. I'm taking on January. I took on half size position yesterday in coin. I added another half of my other half today. Coin 300s for January 2027. They are currently around $42 or something like that. So $4,200 a contract. I think if this measured move plays out like I think it is going to, and we could still have a little backfill here to about 207. Like there's a gap there. That 207 is the S&P gap that can fill. But I think this goes. I see the head and shoulders there too, and all that other stuff. So that's why I think 207 is a possibility, right, on the short term. But I think the measure move out of this is close to the 800 range. So if you're buying the 300 calls for next January, you have a potential of a massive move. You get long-term capital gains because you're not actually selling anything. You're just buying them right now. Yeah, so that's the trade I took on. Hopefully I don't regret it immediately, which I already have because I took it on yesterday. But I had a plan. I'm not buying my full position. So let it come lower. I don't mind. It'll give me a cheaper entry into those same calls. And we'll see how that kind of unfolds. Maybe the 250s become even cheap, like crazy cheap. So I like it here. I think they have the material catalyst, right? Another management company that continues to execute, right? I've heard a lot of people say, I wish they had equity trading on coin, right? And now they have it. So
Sure.
Yeah. Anyway, that's my thoughts on Coinbase.
I mean, the setup, I don't know. I don't have anything to really add to it. I think I'd be looking at this trend line. If the trend line doesn't hold, it's still kind of within this range. I think anything under 150, and I'm not interested. However, if price did take out the 150, I would have an alert set there. Just if price reclaimed it, undercuts it and reclaims it, it'd be an easy entry for at the very least a trade back to highs, and then kind of like you're saying, if it does break out from there, your cost basis would be pretty solid.
Yeah.
Yeah, Hood. I mean, Hood and Coin, I think, are. I don't know.
It's the comps for Hood, right? It's really they're executing at a high level. It's just the comps for Hood that concern me. But it could be that Hood and Coin are just going to pillage Schwab, Interactive Brokers, Fidelity. It could be that that's where that share is coming from, right? So I don't know the answer to it. We won't know till next year. But I think Coin starts to get its valuation expansion based on their equity extension.
I mean, I'm with you. I would agree. I think that they have. Honestly, I guess I don't talk to a whole lot of people, but I don't hear many people talk about Interactive Brokers unless they're pretty serious investors. Whether they're serious, like either you're an active trader or like a serious investor. I don't hear many people talking about Interactive Brokers. They're usually talking about like Schwab and kind of some of those others. But I think the reason I agree is because I think that as people want to take their finances into their own hands, I mean, God, just having cash sitting in your Robinhood account, you're sitting at 4% versus like, I don't know, your typical savings account or checking account where you don't earn shit.
Yeah.
So
Yeah. I agree. One of the guys, someone's talking about snow. I took a long in snow last week. Yeah, I don't like this chart ever. So I'm very hesitant to it. So I'll probably get stopped out and then I will go. But yeah, it's a risk of to 217, 218 from 221 is where I entered. So I'm like, that to me was worth the risk.
I thought
And
all
what
of
the
those,
market,
yeah. I was kind of
right?
thinking,
Like, go back to snow for a second. You can see it, right? Like it breaks out, comes back and retest, breaks out, comes back and retest, breaks out, comes back and retest. And so we're sitting in a similar pattern here. So the retest now leads to the breakout is my thought process. But overall thought is if it starts losing those levels, I'm out.
yeah. Yeah, your RR here is pretty easy, I think, too. I agree. I
Yeah,
don't
what do
have any of
you
these on, but
so it got to 219 today, right? So like what are you risking? $2 or $3, maybe $4? Let's say you want to be even $5. That's a what? 2% risk, Nick, on
yeah,
a trade. That
there's a lot of
2% could potentially
yeah.
get you back to 280. So you're risking $5 to make 80. That I'll take every day.
Ideally, it builds out an island here. Just looking at it, this made a lot of sense to me, especially as this happened because, price broke out. So I have the range here based on this high volume candle, and price broke out, couldn't hold it, failed, tried to pop again, failed, and then it reversed. So it came back to test this low end of this high volume candle, kind of the gap and go or whatever you want to call it. And it's kind of
Yep.
in line with the 200 day. Like your risk reward is yeah, pretty freaking easy. If I was in it, I think ideally the way I'd be looking at it or wanting to see it set up is price kind of curl up here under the 50 day, test the high end of this gap, the gap high, go tight. Your cost is already down here, so it's an easy add or leg in as price kind of rips through this if you get it. Even if you get the gap, I mean ideally it gaps and it gives you the island. Um but I don't know. I try to like kind of if then it out, but
Yeah. So because I don't believe in the chart, it's a trade. And
sure.
because it's such a tight risk versus those levels, Nick, the assumption is I'm going to get stopped out and then it will run. I tried to give it grace for like almost 2 weeks before, so I don't get stopped out of that.
Yeah.
And once it reclaimed over and over again, and I'm still in it for now. I get stopped out. I get stopped out.
I meant to ask you, I was going to tweet you and ask you what your thought on hymns was because I thought it had the potential to be putting in a higher low here. I know it's just a kind of a 1 day candle here, but um I liked how it tried to spike these lows, couldn't follow through and rallied. So I thought today might be kind of an easy kind of same thing.
Yeah, I tried to go green, but there's just apathy in this name, right? It's just
Yeah,
doesn't have the same momentum right now. So I'd like to say, yeah, it can go lower, but it can just keep drifting. And
sideways. Yeah.
so the big level I'd be watching is 35.03 on hymns, right? If you go to, I believe that's where it closed last year, or the highs of last year in hymns.
Damn.
Right?
Yeah.
So like as much as it's wicked, that's still a pretty impressive yearly candle because
Yeah.
it's sitting in the upper wick of last year and it's trying to close above that upper wick of last year. So to me, this is still consolidating. It's not expensive by any means. And as long as we close above that 35 high from last year, I think this sets up for a really good 2026. But there's apathy in this name, has been for 4 or 5 months now. So whatever
Yeah.
I say doesn't matter because every other day it's something else that happens with it. But
Sure.
I like it. I do like it. The other one I like is Baba.
Baba
Looks great. To me, it looks great. We've nailed this trade twice this year, I think. So going 3 for 3, hopefully into the new year. But pivot retest, pivot on low volume, base breakout retest, blah, 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 blah.
Where's the...
I've been patiently waiting. I sold in October, and I just rebought last week. So I have Jan and March calls now. I think this is the stage 2 breakout in Baba. So it'll be shallow pullbacks and higher price movements. So I really want to get June to September calls on this. But I haven't yet until it starts behaving slightly. But I rather pay a little bit more on confirmation than on the further dated stuff, because that requires more capital.
Yeah.
So just something to keep in mind.
Weinstein traders should be all over it.
What's that?
Just as a Weinstein style traders, trend traders should be all over it, just as the 30-week catches up here.
Yeah. So this is very similar to Celsius Holdings, ARK K as well, right? Like base breakout, retest, hold, flag, boom, right? Off to the races. So there's a lot of setups I like that are and guess what the top name in ARK K is? It's Tesla, but closely followed by Coinbase.
Yeah.
So like, if you can see, my positioning for 2026 is based on a certain theory.
Kathy.
No, not just Kathy, right? Like these base breakouts. Sure. Some of it is it's the setups that are there, right? Like I'm in ExxonMobil and Rio as well. Rio Tinto looks phenomenal.
God, it does. Holy shit.
Dude, look at the yearly chart on this. You've got to start with the yearly.
Oof.
17 years inside of the 2008 candle. 17 years.
That's insane. All right.
Along with the copper potential breakout, this is just put in a bullish engulfing year on volume. Can it backfill? Is it a little extended right now? Yes. On a 8% move higher, it got extended because that's how much it doesn't move, right? But I really like this name. Not just 2026. I think it's a multi-year story here. And as of where I bought it, it was a 5% dividend as well. So I outperform treasuries, and if the stock performs well, I outperform on that as well. So I really like these.
So it could be the year of
real world stocks.
Yeah. I mean, dude, coming out of the 2020. Is
that a 3-year tight?
Yeah, it is.
Goodness.
I don't know if it's a thing, but I mean, it sure as hell looks good. I kind of like getting in the middle of I like getting in the middle of both Duzio and MBG about XLE versus like the drugs, because I guess I just don't understand why they can't both run. And I've thought XLE, albeit like been dead money just as it's been in this range, considering the move it had off of these lows, and it has held this fucking tight up here. Like, I don't know. Like, I think about your gold comment all the time when it comes to XLE. Just, I don't know. I think it's ready to
guess
roll.
What the number one holding in XLE is?
SBG or SLB?
Nope. We talked about earlier.
ExxonMobil. Oh, yeah. For some reason I thought it was isn't it ExxonMobil
and Chevron
CVX and what's that?
Chevron and ExxonMobil are the two largest holdings.
Two largest.
I think they make up like 40 or 50% of the XLE. So if these break out, XLE is going with it. Meanwhile, if you're Buffett, you're going to be struggling for a while. Check out Occidental.
Yeah.
So go to the quarterly here.
Catch up.
Huh?
Maybe.
Yeah, but how many? 2011 is that top, right? In Occidental.
Oh, gross. Yeah.
It has been making lower highs for 15 years now. And quarterly, quarterly went inside down. That is not a great look on a larger time frame for Buffett. It's a good thing he has $400 billion. He can just buy this shit straight up. But
yeah, I think for maybe a catch-up trade, I guess maybe you could be trading it versus kind of the 0.618 here if it wanted to kind of retest the lows. But yeah, I'm kind of with you. I'd rather.
Should we ask them Fin Twitters on how their catch-up trade in JD is going?
Oh boy.
Catch up. There's a reason things are weak. We've talked about this so long, right?
Yeah, for sure.
Things are weak because they're weak. And they're not weak on a 3-day time frame. They are weak on a multi-year time frame. Like, it's got to change. We talked about GE. I just posted that chart today. GE was in a 24-year downtrend. As soon as the downtrend got established, broken, and made new highs, it has doubled since then. And that was after it went from 20 to 170. It's still doubled from there. Anyway, this is but they executed, right, Nick? That was the big thing, that they started to execute. The first thing they did was unlock value by selling off every company they ever owned, and then the company that remained started to execute. So they get rewarded.
Yeah. All righty. Well,
that 111.
That wraps up our hour for the day.
So I'll leave you guys with one thought. Towards the end of the year, there's a lot of performance chasers to make up for whatever it is in their underperformance. Names like yesterday, FJet went nuts because they're new IPOs. You can find a lot of these, and they can go nuts during this last 2 weeks of the year. If you remember, my first remembrance of this is 2015 when Twitter went nuts towards the end of the year. It had just IPO'd around that time, and Twitter went absolutely nuts, and then it was a miserable stock. So don't overstay your welcome, but you can find these names that will have one-day pops, and you can, on equity, get 30, 40, 50% on these moves. So I'm in one that potentially can do it here. If you're interested, it's a new IPO. It's MDLN.
DLN.
Yeah. So break of 43.90 or break below 41.90, you should be out. You should have tight stops on this because it can go either way. But these names can give you, under 40, not 41.90, under 40. So you have, maybe a 5% risk to maybe get a nice trade towards the end of the year. But this is a phenomenon that happens every year. So just keep that in your war chest towards the end of the year, especially going into Christmas time frame. People need to pay for their kids' gifts.
True that. It's an expensive time of year.
Yeah.
Well, guys, everyone in the chat, thanks for tuning in. Thanks for your patience. A little weird to be steering the ship. Bags will be back at it with us tomorrow for the Stock Twits pod at I think noon Central, 1 p.m. Eastern. Yeah.
Yep.
Yeah, looking forward to a Xmas Eve special on the Stock Twits pod. Thanks, guys.
Happy Merry Christmas, everyone.
All right.